Good morning, everybody. My name is Mary Rose Burke. I'm CEO of Dublin Chamber. I'm delighted to welcome all Chamber members and also maybe some potential members on the call this morning. We have a fantastic lineup of speakers, and the real focus, and I'm delighted to see this focus, is on recovery. So I suppose we spend a lot of time speaking about the here and now and about the crisis, but in the way of business, it's around what's around the corner, where are the opportunities, and how do we set ourselves up for those opportunities. I know you're going to hear about some of the supports that are available to help us remain viable through the crisis, but also we're going to hear about how to finance your business into the future and to be able to maximise the opportunities that will definitely be coming, and how we make sure businesses are set up to avail of those opportunities. The question box, as always on our webinars, that's the way to interact with our speakers and our panelists. So please, throughout the presentations, as you think of ideas and questions you want to put to the panelists, pop them into the question box there that's in the side panel of your screens. So I'd like to hand over now to our MC for the event, Niall O'Grady, who's the CEO of Linked Finance, who provide finance in a non-traditional way to businesses, and they're going to be a big part of the recovery. Niall will introduce all of our speakers and share what I know is going to be some fabulous insights. So thank you very much for attending, and Niall, I'll hand over to you.
Mary Rose, thanks very much for that, and you're welcome everybody today. Thanks very much for the time, and I think it is going to be a very exciting and informative session. Now, we only have 40 to 45 minutes, so as a brief overview, there's three things we're going to focus on. First of all, the state of play with where businesses, SMEs in particular, are these days, the good, bad and the ugly. That's really short term though, because we want to start looking to the medium term. People are talking about a tsunami of demand, particularly in areas where they've been very badly affected by it. And I was just saying to the panelists that people are even talking about price gouging over the next number of months, which seems inappropriate, but that's the second. And then the third thing is the role of finance and the finance options that have been made available over the last number of months in particular, and any changes that we see in the future to those. So I was just saying, I've seen that there's lots of accountants, advisors, business owners, etc. listening to this, so you're all very welcome. It's great to have an esteemed audience. And just to introduce the esteemed panel, we have, I used to say to my left, but on the top left-hand side, we have John Madigan. John Madigan has worked in lots of different banks over the last number of years in his career, and is now with the SBCI, who have a really important role to play in the recovery. We have Bobby Kerr. Bobby is well known to all of you. He's an entrepreneur, and really at this stage, I think is a national champion of the SME through particularly his broadcasting career in the last 10 years and his work on the ground. And we also have Felim Meade. Felim has joined us because I asked him in the last 24 hours, so appreciate the short notice, Felim, and thanks for coming along. Felim is the on-the-ground entrepreneur, if you like, just to represent what's really happening on the ground. And he runs a number of different businesses, between burritos, great coffee, and advice to people that are trying to make a success of their business in other countries like China. So, Phil, I'm really, really great for all three of you to have you here. Before I start, sorry, my name is Niall O'Grady. As Mary Rose said, I'm just appointed CEO of Linked Finance, and we're absolutely delighted to be working with more than 3,000 SMEs. We want to be part of this recovery. And we're thrilled recently to be appointed as one of the first non-banks in the credit guarantee scheme. So obviously we're very busy on that at the moment, and we'd love to have any conversations with you over the next number of weeks and months. So guys, I suppose if I could start with you, Bobby. In the last couple of weeks, I've been speaking to lots of business owners and accountants, and the one consistent thing is almost a complete inconsistency in how this has affected, the last year has affected different SMEs. Could you give us at a high level your observations around how SMEs are finding this?
Sure, Niall, and thank you for having me here this morning, and good luck in the new job. Just the sector, the SME sector, it's very diverse, but broadly, a lot of SMEs are worried, they're scared. A lot of them have seen their turnover dry up, they've seen their markets disappear. But then again, you have sectors on a very much a sectoral by sector basis. If you're a pub, a restaurant, in tourism or hospitality, you're in that former category, which is a perilous place. And I really do fear for, those businesses, particularly, you know, as the government schemes, which have been very good heretofore, and there's many businesses that are only there today because the government are paying 80% of their wages. But there are other sectors that are quietly doing well. You've got medical devices, pharma, logistics, software. Even then, there's been a big shift in where the opportunities are. So there's been a move from the city centres, from the metropolis. There's booms in suburbia. There's booming businesses, the butcher, the baker, the candlestick maker in local suburbs, and they're all doing very, very well. And I think the sentiment is there for Irish people to try and support local businesses. That's more than just talk now. I think while people are shopping online, people are also making the effort, even while shopping online, to try and buy Irish. So it's a difficult place, but I would say that if you can keep some turnover coming into your business as an SME and avail of all the government supports that are out there, there is going to be pent-up demand in some sectors, and I think bring it on. A lot of businesses are will do well in the months ahead.
Great, thanks. And maybe, Felim, from your perspective, as you know, you've got obviously a good wide range of business viewpoints. Does that tally with your observations and how you're getting on at the moment?
Yeah, absolutely. I could have nearly written the script there with Bobby. It's I'm in the hospitality sector, which is, you know, one of the worst hit, but and definitely there is a shift from city centre into suburbia. And again, I think that's going to stay. Again, very hard to predict into the future, but I would say that somewhere between 25 and 35% of the people who were working in an office in 2019 are actually going to be working at home in 2021, 22, 23. So I think the shift into suburbia and into the regions and into the towns and not coming into the big cities, I actually think that that's here to stay. Certainly 25 to 35% of into the future, into the next 3 to 5 years. And I think that that creates opportunities. I think that's, and as Bobby said, I do see from just in my locality in North Dublin, is that people are shopping locally, and I think that is something that if you know, if we're going to take one thing from this, is that there is opportunities outside of the city centres and the large towns.
Great, thanks. John, if we can bring you in, there's always a lot of talk around, you know, the importance of SMEs in terms of their contribution to the economy, to employment, and you know, the bedrock of the economy. Could you just talk us through the role of the government, and in particular the SBCI, over the last number of months in the finance landscape and the business landscape?
Sure. I suppose I always look at this market relatively straightforwardly. You know, at the height of the employment, you know, about 3 or 4 years ago, there was about 2.2 million people employed. 600,000 of those were state, 200,000 were in Enterprise Ireland companies, 200,000 people were in IDA companies. So effectively, that left about 1 million or 1.1 million, which were employed directly through SMEs. So they are the bedrock of the Irish economy. And actually, the recovery after the last crisis came about by those SMEs adding on 1, 2, 5, 10 jobs. And that's where the recovery has been. So it is critical from a government and from an SBCI viewpoint. It's, I suppose, the clearest indication of how SMEs are viewing finance at this moment in time is if you look at the outstanding loan book to SMEs in 2008, which stood at 36 billion euros. In 2019, at the end of 2019, that has dropped to 15 billion euros. So SMEs have found a way of surviving without borrowing. They've managed their cash flow extremely well, and they have actually managed to survive and thrive. However, it raises a question mark around investment. Irish SMEs are just as likely as their European counterparts to invest, and that's been shown through all the European Investment Bank surveys and the SAFE survey, which is a big survey that's done right across Europe twice a year. But what it has actually shown is that Irish SMEs are less likely to borrow to fund that investment. So they're using their own funding to actually invest in their business, which may limit their ability to grow. They may not be investing at the optimal level. So the SBCI was set up at the end of the last crisis to try and do 3 things: bring down price, bring in more competition, and make access to finance easier for SMEs. So that's really the bedrock. That's where we've been set up and what we've been set up to do. So we started very simple. We gave out liquidity at a discount, which worked for a very short period of time, but then liquidity was no longer an issue. So access to finance was the critical piece. So access to finance for us was actually beginning to get solved over the last couple of years by risk sharing, and by us allowing either the government to take some of the risk or getting European institutions to take some of the risk away from the SME. That it meant that the actual security levels dropped. There was an element of unsecured to be attaching, or unsecured lending to attach to all of our schemes. And this in turn should have made it easier for SMEs to borrow. So we're beginning to see that happen through the schemes, much more so than we would have done through the liquidity. So we believe that we're beginning to address that, and SMEs' attitudes to borrowing are beginning to change because they can now see that they can borrow with the strength of an 80% government guarantee behind them. The bank or the institution, like Linked, will take 20% of the risk, and it actually removes the need for personal guarantees and that, you know, that worry that people have had and SME owners have had, particularly since the last crisis. So by having the SBCI in the marketplace, when the crisis hit in March, it allowed us to introduce the COVID-19 working capital scheme within 2 weeks of the shutdown happening. It allowed us then to work towards introducing the credit guarantee scheme, the COVID credit guarantee scheme, which Niall Linked is now a major part of. It allowed us to do that within months. So if Ireland didn't have the SBCI, the ability of the government to set something up, a scheme like that up, would have actually taken probably a year to 18 months. So that's the advantage in summary, and that's where we're positioned.
Yeah, I just maybe to highlight 2 points in what you said there, John. The first is that, you know, having the SBCI filter the money out has been a huge advantage, and we found actually from talking to lots of our customers that instead of seeing traditionally the bank manager as the man with all the advice and all the options, they're now beginning to broaden their horizon. Business owners are now talking to non-banks. Linked Finance obviously been one of them, and certainly the risk sharing has been a huge advantage to them. But maybe to Bobby and Felim, one question that you made there, John, that I want to ask the guys on the SME side is that reticence to borrow in Ireland. There was a story on News Talk yesterday morning, I thought it was very interesting, of Hardcast. It was on in the 6:30 business program. And in Hardcast, what they'd done is they had borrowed to design more products. Effectively, they do cast furniture, street furniture for Ireland and internationally. And they had lots of product innovation and lots of investment to make sure they stayed ahead of the competition. But what is it in the Irish SME sector that just holds them back a little bit from going into the finance market?
Well, just maybe I could come in there, Niall. I think that any sort of logical and reasonable business doesn't want to undertake borrowings that they can't pay back. So that should always also be good news for an organization like Linked Finance, because you don't want to lend to somebody who can't pay you back. So like that's the way I look at it, that the lender and the borrower theoretically should be on the same page. And you know, I would say that if I didn't have to borrow money, and I wouldn't, but I would say that the most common reason that businesses fail in this country is they run out of cash. So what I would do is I would put borrowings in place that I knew that I had there, but I may not necessarily draw down. And that's what I think really, you know, particularly when we're emerging out of what's going to be a fairly significant recession, that, you know, businesses are going to need a spare tire, and it's that mantra of not running out of cash, making sure that you present yourself to a lender before it's too late, that you present yourself as a proposition that is lendable to, and then, you know, then you maybe set yourself up, and then maybe, you know, and maybe you don't want to hear this, but maybe you don't want to draw it down unless you have to, but inevitably you do because you need to. That's the way I see it. I think that really any kind of reckless lending or borrowing is a no-no, and that's what we had before, and we saw where it got us. So
So
I think there
there's
has to be a
reticence
mutual
there. Yeah.
respect for ability to borrow and ability to repay.
And
Yeah.
Felim, I mean, you've gone through lending processes, borrowing processes as well. So be interested in your perspective.
Yeah, I think one of the things I do absolutely believe that there is some element of appetite for businesses, SMEs, to borrow, but businesses that went through the last recession, just even myself included, have learned to be very, very careful if they're taking borrowings. And very interesting, I was actually, I would think I was, if not the first, I was the second person back in March to apply for the strategic bank. I got in 7 minutes after it went live on about the 20th of March. So I've been through this process, and the speed at which the strategic bank got up and running, got it out there, was absolutely phenomenal, and still is, in the 3 different schemes that they have got up. But very interesting. While the appetite is there, having gone to the market to expand and look to the traditional banks back in 2019, looking at what the traditional banks were doing in 2020, they, in my opinion, they weren't building in the 80% guarantee that the government were giving. There was no difference between their application assessment in 2019 and 2020, and that was a little bit of bugbear of mine. You know, they didn't take into account that 80% government guarantee. And I think what's really, really been helpful to businesses is the likes of Link Finance, the credit unions, the permanent TSB, opening up the market, opening up the access to this very important funding. I think will be a great help to SMEs going forward into 21 and 22.
Great. Thanks. If we look a little bit to the future now, we have this sort of dichotomy to a certain extent of, you know, the government supports such as the EWSS been eased back, and at the same time we have an expectation certainly that the demand levels are going to come back. So maybe, Bobby, if I could just ask yourself and then John, you know, your guidance for businesses that are trying to, on the one hand, cope with maintaining a good cash flow and at the same time weaning themselves off government support such as the wage support scheme.
Yeah, and it's interesting if you look at the EWSS, it's quite a blunt instrument and it's worked well, but you can find yourself, and I know many businesses that have been this way, that you can be 20 grand the wrong side of being 30% down in your turnover, and it makes a massive difference of whether you qualify or whether you don't. And I know of a couple of businesses that were on the EWSS that have had to sign off for that reason. So I think that, you know, again, the government it will be tapered off, because I think they know that if they're too severe on withdrawing the support, it'll cause just a cascade of business failures. So that I really don't see that happening. I think it's really important for SMEs to know where they are financially. Like, if the government is paying 80% of your wages, you actually don't, well, theoretically, you don't need that much turnover to stay alive if wages is a significant part of your business. And Felim will know this, that in the hospitality and, you know, tourism, pubs, where wages is a significant business cost, if you can get 80% of that underwritten, again, just keeping some turnover coming into the business will keep you alive. And there's an awful lot of talk about money, you know, that's out there that's to be spent, pent up demand in certain sectors, and businesses need to be ready for that. But it comes back as well as to about knowing where you are financially. Like, have you spoken to your accountant? Do you know? And again, the mantra I'm using is make sure you don't run out of cash. So have you spoken to your accountant to know how much exactly you need to stay going, to keep the lights on until this passes? And that's really going to be the difference between the ones who survive and the ones who don't here, is that acute awareness of and the minutiae of really, really good cash management. And, you know, freezing, talking to your landlord, freezing bills you don't have to pay. If your sales stop, you know, you have to look at your costs. And if you can tread water until demand comes back, then you'll be there for when that demand comes back. So that's my view on it. It's not very scientific, but I believe it's quite logical.
Well, it's very practical, to be fair. John, on your side, you know, you will have heard a lot of SMEs talking about, you know, this edge of a cliff phenomenon where suddenly the support is gone. Just talk to us about the SBCI's view on that and any plans that you have to make sure that it's a glide path as opposed to a cliff.
Sure. I just want to pick up on just a couple of points that Bobby raised, which was around, you know, getting your sanction in principle done now. A lot of SMEs don't understand that if you get a sanction in principle from linked finance, it'll hold for 3 months, or, you know, in some cases it'll actually hold for 6 months unless something substantial changes. So having that work done and having access to finance quickly is a really good thing to do. In terms of just the appetite to borrow, we believe if we bring the right product to market, SMEs in Ireland will look at it. If you look at the long-term scheme that we brought out, which was the Future Growth Loan Scheme, it was initially a 300 million scheme. It's now 800 million because of the demand that was in there for it. To date, more than 600 million of that scheme has been sanctioned. Now, it hasn't all been drawn, but actually a large proportion of that has been drawn. If you look at the credit, the working capital scheme and the Brexit loan scheme, of that 300 million, 182 million is out there with SMEs. So, you know, SMEs are beginning to look at this, but they are coming back to us to actually look for an eligibility code to be reissued. We issued the code, it lasts for 6 months, and they're coming back to us now saying, look, I now know what I want to do. I can see what I have to do when I reopen, and it's really important then that I can get this code reissued. We will do that in 24 hours. But just in the context of the credit guarantee scheme, a couple of things that people or businesses need to understand is that this is there to support businesses as they emerge from COVID. All right, it has been extended from the original deadline was December 2020. It's gone out to June 2021. It's likely to go to December 2021. It's 5.5-year money, so it allows people time to actually, you know, borrow now and pay it back over, you know, a medium-term period of time, which is actually kind of suitable for a lot of Irish SMEs. It also allows businesses to refinance. So if somebody took out a COVID-19 working capital scheme, you know, immediately the COVID thing hit, it allows them now to go back and refinance that initial 3-year loan over a longer 5.5-year period. And there is also the ability within the COVID-19 credit guarantee scheme that 30% of any new loan amount can be used to refinance other existing debt. So if you had a loan of 100 grand, or if you applied for 100,000, 30,000 of that loan could be used to pay off a debt that pre-existed COVID-19. So that's an important point that people need just to be aware of, that there is cheaper financing available now. You know, refinancing is not something that's normally considered in terms of government or European schemes, but in this case, 30% of the new loan can be used to pay off pre-COVID existing debt, and COVID-19 working capital loans can be refinanced under the scheme. So I think what we're trying to get to people is that, you know, the scheme, there's been some noise around it in terms of, you know, it's a big scheme and, you know, what's the take up? There's actually more than 125 million euros of that scheme drawn down by SMEs in the last 3 months. So, and that the pace of that is actually picking up, I think, as businesses are beginning to see the exit coming from this particular lockdown. So I think this is a really, really important scheme, and people need to understand the flexibility within the scheme. Fully take on board the point around bank credit policy, and that, yes, that is always going to be something that has to be overcome. But I think really it's one of the best schemes that's out there in terms of helping businesses get back on their feet.
And I'd echo that. It's some of the applications certainly that we've seen over the last number of weeks in linked finance certainly indicate that people are starting to get the finance now to invest over the next 6 months to prepare for the comeback in demand. Felim, you're a good example of somebody in business who essentially has pivoted quite significantly. Like you talked about the hospitality sector, which has been really badly affected. And yet you've gone in for, I'm going to call it a pivot strategy, but you're probably better, you better phrase it like that. not just to survive, but to thrive and grow. Just talk to us a little bit, if you, without giving any confidential stuff away, about how you've done that.
Well, I see opportunities, and I do see a shift from city centre out into the suburbs. And I think you're going to see elements be it in bricks and mortar property. I think, you know, rents and opportunities for leases are going to come down. I think there's going to be more opportunity for maybe pop-ups, for more short-term, be it, you know, containers, or be it sheds, or be it trucks, vending trucks. This is, again, all hospitality, but, you know, in general retail as well. I just think that there's going to, and buying Irish. So I think there's going to be opportunities on the kind of the remote, kind of the side of parks, at more, you know, where seaside. So I just think there's going to be more opportunities for retail and hospitality over the next 3 to 5 years outside of city centres. As I said, colleges are not going to be going, you know, back. People aren't going to be going into the city centres. People are going to be working from home. So I just think there's a lot of opportunities, and that's where we're looking at opportunities to move out from the bricks and mortar and into the more unconventional area of retail.
Okay. One thing I just want to cover off is, and I might ask all the panel members the same thing, which is, if there was one or two pieces of advice, I might start with you, Bobby, 1 or 2 pieces of advice that you'd give to the audience. And again, we've got business owners, business advisors, etc. You've talked a lot about, you know, watching the pounds and keeping the revenue going in the short term. And then John has talked a lot about the options that are available in the medium term. But you're a successful SME owner and entrepreneur yourself. You know, any pearls of wisdom that you give to people in these particularly challenging times as we come out, hopefully, of this pandemic?
Well, I'm going to say it again, is don't run out of cash, because I think that's the most perilous thing for any SME, and, you know, regardless of what sector you're in. So that's number one. I'd say if you can avoid it, don't put yourself under pressure. Borrow more than you need. And like John said there, I'm a huge believer in having a provision for funds, the rainy day stuff, the stuff that you think you may not need, going back again to get it reissued or whatever. But knowing that you have that cushion to fall back on allows an SME to sleep at night. And I think that allows, if an SME owner can sleep at night, it allows him focus on his business, not on worrying whether he can pay back the bank or the lender or whatever it is. And again, another thing I'd say is, don't sign a personal guarantee. And that may not be music to the banking community's ears here, but if you can avoid it, I would, because I think there are still people out there from the last recession that are paying that price. So, and again, they're my sort of summary pieces of advice. They're crude, they're blunt, but I believe they work.
Great. And I think one of the things that comes up consistently in discussions with business owners is, you know, being able to sleep at night and give themselves the time to think about what next. Because in many cases, people are focusing on the here and now immediately, putting the fires out all the time. And it's shown again and again that having that peace of mind allows you just to stand back from the business, as you were talking, Felim, there, see the opportunities that are out there and prepare yourself to go after them. John, maybe a similar question to yourself. In the SBCI, you clearly have the interests of the SMEs at heart and business in Ireland at heart. So what are the things that you think, you know, really mark out the people that will survive and thrive into the future after this lockdown?
Yeah, I think, to be honest, Niall, the people that I see, you know, are the people that have spoken to their accountants, who have gotten their business plan ready, who have actually engaged with their advisor. You know, as you said, I used to work in retail banking, and as a branch manager, you kind of were the first person that a lot of your customers would have come to. That's no longer available in a lot of cases now. You can't have that one-to-one. You know, definitely with the bank, you can have it with Link Finance, but you can't have it in a lot of cases with your bank manager. So your accountant has actually really become that trusted advisor piece, and I think that's critical in any of the successful applications that I've seen, because there's a huge difference in the quality of application that comes into any financial institution. And the more prepared you are, the better chance you have as you go through. All right, that's one thing I'd say. Again, to reiterate Bobby's point, have your finance ready. In terms of the personal guarantees, yeah, I agree that if you can, you know, don't sign one. You know, they were at the cause of so much grief after the last particular crisis, and our schemes are designed, you know, to allow the bulk of SMEs borrow enough money. The majority of borrowing for SMEs in Ireland is less than 150,000. That's the average. Okay, the schemes are designed. The credit guarantee scheme has a 250,000 limit, under which no security can be taken. The future growth loan scheme has a 500,000 limit, under which no security can be given. That has two advantages. One, it takes away the worry of signing a personal guarantee, but it also speeds up the process, because you're not now talking about taking legal documents or legal charges over anything. If you take a loan above those limits, the bank is entitled to take security, but if it does have to take a personal guarantee, it's to grasp the additional security, or it's to the 20% that isn't covered by the 80% government guarantee. And that's a really, really important point, because a lot of SMEs were willing to sign a guarantee for a limited amount once they knew what the limit was. All right, but if you can avoid it, do so.
Okay, thanks. And I suppose the same question to you, Felim.
Yeah, well, this is very practical, and I've put it into my effect in all my business. So I would have employed 100 people in multiple businesses and companies throughout Dublin and Leinster. And what I did was I went to weekly payments. So I went to my rent, my landlords, any debt that I had, any large supplier, and I went weekly payments from March last year. And I also then sanctioned every single payment myself. So nothing left the business bank account unless I sanctioned it myself, and actually did the payment on my app, which meant that on Friday evening at 5 o'clock, I knew exactly how much money I had in my business. And that was really, really important. So I knew I was able to plan for the next week, knowing that I owed no one anything at 5 o'clock in the evening on Friday. And that goes back, to Bobby's point of knowing exactly what you have coming into the business. And then the second point is that every small business is going to have some element of debt, some creditors that they need to pay. And what I would suggest is that knowing whatever income that you have coming in for the last year, or predicting what you're going to have coming in for this year coming, is that engage with your creditors. Be front up, say, this is what I have coming in. This is exactly what I owe you. Here's a 6, 9, 12-month payment plan. Don't duck your head in the sand. Get ahead of it, reach out. And 99% of companies, if they know they have a guaranteed amount of coming in, pay off, or sorry, if a creditor knows that they have a set amount coming in every week, they're more likely to engage you. And that there are two very practical procedures I put in place, and they've been fundamental for survival this year.
Great, thank you very much. If there's nothing else, I'm just going to, I suppose I'll summarize the 3 or 4 key points that I think we've got from the last 35 minutes. First one is preparation and planning. So I think both Bobby and John were talking a lot about the importance of meeting with the accountant, making sure you get into that monthly discipline of looking after and signing the accounts, and making sure you watch every penny that's going out, as we just heard from Felim. Second is just being aware of all the options that are out there, because if you look at all the options from the various bodies, it is quite remarkable the number of things that are out there. And I think the good news certainly that we've seen from John is not only are they out there, but also they're evolving as the needs of people evolve. So inevitably, the characteristics and some of the features of the products that are out there at the moment are not the same as they would have been 6 months ago, because the stage of direction in this pandemic has certainly changed quite significantly. But I think the most powerful thing certainly that I've heard is that if you see the opportunity, you can see the evolving needs of customers and see the opportunity, be it between rental changes in one part of the city and one part of the country versus another, or like I'm from Euros, people are now sort of putting refurbished horse boxes outside pubs in Euros and charging €3.20 for cappuccinos. Now, in the great scheme of things, I never thought in my lifetime I'd see that in Euros, but there are queues of people because once upon a time, coffee was coffee. Now coffee is like liquid gold or liquid oil. People are using it as a small treat just to get out and enjoy themselves. And people like Felim and Bobby are smiling away at the thought of that. So, you know, spot the opportunities and respond to them. And I think that's happening in terms of the SBCI, and certainly Felim and Bobby and the guys that are successfully adapting to the new customer changes are thriving. And of course, the last thing I'd say, and I would say this, wouldn't I? Linked Finance is thrilled to be associated with the credit guarantee scheme. We're there for the last number of weeks, and certainly we've seen a very significant demand. And the one thing is the characteristic of the applications that we see that are getting through have a couple of characteristics in common. Number one, the preparation on the management account side, the bank statements are always excellent. And secondly, they have identified a changed opportunity that they've been watching for a long time. And SMEs don't take debt lightly, as everybody will say. So when they make that decision to go for it, they need a financial services organization that has the agility and the speed and simplification in the process that the likes of some alternative lenders, including Linked Finance, offer. So look broadly is my only advice when it comes to finance. And we'd be thrilled to have any conversation with you over the next number of days, weeks, or months. So I'm going to wrap it up there. I want to thank the panel. It seems to have flown past, but I said to them at the beginning, we didn't want to hear life stories. We just wanted to hear nuggets of wisdom, and I think we've got that today. I'd like to thank John, Bobby, and Felim, and all of you in the audience for taking the time out of busy days. And I'd like just to wish all of the business owners out there every possible success in the future. Thanks very much.